Most entrepreneurs never discover this, but the IRS has a quiet formula they hope you never decode, because if you do, you'll understand why a properly structured, max-funded IUL can break even in as little as 5 years, and why that one detail breaks the IRS's entire long-term tax plan for you. And today, for the first time, you're going to see exactly how it works. Not with theory, not with hypotheticals, but with the real numbers of a woman who rebuilt her life after losing everything except her 2 children and her will to rise. This is the strategy the IRS cannot touch, and the one they hope you will never learn to use. Hello, my name is Robert Balgac. I'm a founder and CEO of Black Swan Insurance Group. And since 2017, we have helped over 20,000 families build strategic, tax-advantaged wealth while earning 800 plus 5-star Google reviews. And our mission is simple: to make wealth simple, predictable, and protected, especially for small business owners who don't have 401ks. So if you like to have a personalized, tax-free wealth strategy session where we can design your own max-funded IUL, you can click on the link below and set it. But first, let me introduce you to the woman whose story you're about to experience. Meet Shamiko. In Atlanta real estate, she's a force of nature. Top 5% agent. Clients adore her. Colleagues respect her. She built a real business in a market where most people burn out in 2 years. But behind her billboard smile is a story very few people know. At 33, she had her second child. 3 months later, she received the worst phone call of her life: a car wreck on I-285, a hit and run, and a husband who didn't survive. No life insurance, no savings, just 2 babies and a 34-year-old mother who refused to surrender. I didn't have the luxury of falling apart, she said. My kids needed everything, and I just kept going. She built her real estate career on grit, prayer, and sleepless nights. But at 45, earning over $300,000 a year, she confessed, I built a business, but not a future. And if anything happens to me, my kids lose everything twice. That's when we opened the door to the strategy that changed her life. But before we show you her numbers, you need to understand the engineering behind all of these numbers. Most people are driving a financial gas-guzzling truck when they should be driving a Tesla. Here's what I mean. The traditional IUL is like a gas-guzzling truck. Heavy frame, burns fuel just to stay alive, constant drag, slow to accelerate, inefficient long-term, and designed with too much debt benefit, and grows painfully slow. That's the version the IRS loves, because inefficiency, slow compounding, there is a possibility for more taxable distributions down the road. Wealthy families, they don't have these gas trucks. They drop Teslas. So the max-funded IUL is like the Tesla. Minimum required frame, like a minimum debt benefit. Maximum interior space, your maximum cash capacity. Ultra-low energy loss, like your low cost of insurance. Fast early acceleration, which is your 5-year break-even point. And it's efficient over long distances, over your long term, preparing you for retirement. And it's quiet, smooth financial plan. Same tax code, same category, completely different performance. Because success is not about the type of the policy, it's about the design. And once you understand this metaphor, you'll understand why her numbers look the way they do. Now, let's open up her illustration and watch the Tesla accelerate. Entrepreneurs are used to delayed gratification. But when they see a financial strategy start producing results fast, trust solidifies instantly. So let's walk through her real numbers. In year 1, she's contributing $20,000 in a year, and the cash accumulated value is $16,983. The Tesla leaves the driveway. Early costs exist, but the efficiency is already evident as 85% of her premium went to the cash. In year 2, her accumulated value jumps to $35,075. That's the growth of over $18,000. So nearly the entire second year premium shows up. There's a minimal drag and the engine is humming. Year 3, accumulated cash value, $54,231. Another growth of $19,156, halfway to break even. In year 4, Accumulated cash value is projected to be $74,457 with a growth of over $20,000. And 3/4 of her contributions now sit inside her cash value. And the momentum is building. At year 5, when she's 49, the projected accumulated cash value is almost $96,000 versus her contribution of $100,000. So she's 96% efficient already. And when we reviewed these numbers on Zoom and she saw what they look like, she just stared at a number at disbelief. She was quiet. Eyes were almost wet. And she said, so I'm not behind anymore. Am I actually catching up? And for a woman who spent 11 years rebuilding her life from nothing, a 5-year break-even was nothing short of redemption. And here's the part most entrepreneurs never learn. The IRS structurally prefers high death benefit life insurance because the higher death benefit has higher internal charges, slower cash growth, and higher taxable retirement income later. Not emotional, it's not mathematical, but when you minimize the death benefit under tax code 7702, you eliminate the drag the IRS relies on. That's why her Tesla now accelerates. So yes, she's break-even in 5 years, but that's just the beginning because now we are activating the wealthy family lever. Option B to option A. So to understand this, picture your IUL again as a warehouse. So option B is equal to expanding the warehouse. You raise the roof a little bit while you're filling it in, more contribution capacity, more compliance room, more growth potential. And this is crucial during the funding years. So until her retirement, we kept her in option B, maximizing her storage space. But after she's projected to finish heavy funding, we switch to option A. And option A is like sealing the warehouse. The roof is locked, the costs drop, and the efficiency skyrockets. And then her Tesla shifts into the second gear. If you look at the premiums in the first 20 years of the policy, accumulated cash value at age 64 is $688,000. The death benefit is $1.2 million. And her cash value growth over 10 years is $460,000. And all of it is insulated from market crashes. And for a single mom who lives on commission, this wasn't just math. It was healing. But there's a hidden tripwire here, something that ruins policies every year, the MEC line. A MEC is a short for Modified Endowment Contract, and it occurs when too much premium goes in too fast. If you cross this line, loans become taxable, income loses its advantage, and the entire point of tax-free retirement collapses. So proper design must obey tax code 7702, obey tax code 7702A, and be MEC tested annually to maintain premium ratios and to execute option B, conversion to option A, with precision. So Shamikwa's design does this flawlessly, which is why she will be able to activate the part entrepreneurs care about most, tax-free retirement income. At age 66, her IUL becomes her paycheck. No taxes, no market risk, no IRS interference. Annual tax-free income of $70,215 per year. Duration, 30 years, with a total taken income more than $2 million, tax-free. At age 94, the loan balance is going to be $5.5 million, and there's still a remaining debt benefit of $105,000. So even after 30 years of income, she leaves something behind. But the most important moment wasn't financial. It was emotional. Her daughter asked, "Mom, what happens when you don't sell houses in?" And Shamikwa paused. And for the first time in years, she smiled with relief, not fear. She said, "Baby, I won't have to. Mom is finally safe." And this wasn't just about beating the IRS or outperforming the market or chasing returns. This was about dignity, stability, and breaking generational fragility, giving her children the security her husband never got to build. So if you would like to see your own version of max-funded IUL, the efficient version, the tax advantage version, the mathematically optimized version, then click the link below and schedule your tax-free wealth strategy session with us. And we'll build your minimum debt benefit design, maximum funding strategy, option B to option A plan, MAC compliance map, and 20 to 40-year retirement income plan, a full legacy blueprint. So this video was your master mechanic walkthrough, and your personal design is the next step. So don't miss it. And remember, it's not what you earn, it's what you keep. Enjoy the ride.